Welcome to the Bobby Suarez podcast. I have the pleasure today of interviewing a good friend and mentor, Marcos Egipciaco. Marcos is the CEO of Sovereign Real Estate Group. He's been one of the pioneers in the single-family rental space. Marcos, thank you for coming out and doing this for me.
Thanks for having me, Bobby.
Appreciate that. I want to jump right in. I know I briefly mentioned a little bit of background about Marcos and his company, but can we jump right into your journey? How did you get started in business and in real estate in general?
So real estate has always been an area that I had a passion for, and I always thought that the barrier of entry was a lot easier than getting a formal college education, which I was not interested in doing. And so as a kid, of course, we always watched Carlton Sheets and his infomercials at 3 o'clock in the morning talking about no money down, and it always intrigued me as a kid. In high school, I had a teacher named Armin Grossman, which is still a mentor to me, that was always involved in fixing and flipping homes. So I approached him, and he and I talked about the things that he did, and he kind of gave me a few tips. And out of that meeting came the opportunity for me to buy a home that he inherited from his grandmother. And so that was my first flip, which I did in 11th grade.
In high school, interesting.
So that home we bought for $58,000. I obviously had no money. I brought in a friend that brought a hard money lender, and we renovated that home and we sold it for $95,000. And so that was my first real estate transaction in high school. And of course, the passion of real estate continued to grow. I took a short period of time where I got into the freight forwarding business. I'm a licensed customs broker. I don't want to spend too much time on that. But while I ran that business, I was always trying to get back into real estate however I could. Some years ago, when we had the condo conversion boom, back in the heyday, the 2003, 2004, 2005, there was a lot of multifamily transactions that were happening. And I knew multifamily was an area that I really wanted to play in, and development specifically. And I found that I didn't have the capital to get in as a principal, and so I wanted to get near the asset class without necessarily having to buy it. Okay. And I think that's important because I think a lot of people listen to the gurus talking about buying 300 to 500 doors, and it's just not realistic for a small-time investor to do that. So I think getting near the asset class to learn the asset class without necessarily having to buy 300 doors is probably a good way to start, and it's the way that I started. So I started to broker multifamily buildings to condo converters. Slowly, I started to acquire my own buildings. When I exited my freight business, I had a capital event, which I reinvested back into multifamily. And of course, I had let's call it the luck, that I sold my last building in January of 2007, right before the major crisis.
Can we share what you made on that one? Because I know.
So that deal was are we talking about
the one that you made
the one in Hollywood? Yeah, so in 2006, I basically did my first multifamily transaction. It was a building in Hollywood, and the deal had a $2 million commission. I netted $1 million. I was 26 at the time, and from there I realized this is something I really wanted to do full time. And then I said it's time for me to exit the freight business, which I wasn't passionate about, but it was a means to an end, right? It's how I sustained my family, and so I started to then tie up buildings, and I thought I was going to become a condo converter. And every time I tied up a building, someone wanted to buy my option. So again, it was not uncommon to tie up a building and net a six-figure paycheck, in addition to collecting a real estate commission for facilitating the building to a condo converter.
So you're doing what a lot of guys do in the single family or like in the residential space. You're just assigning your contract,
correct,
to an end buyer. And you did it in the commercial world.
Right. We're talking 2006, so this was in the really early days.
Yeah.
And I was fortunate enough that the last building I had in my inventory, I sold in January of 2007, right before the major crisis. So I would say that I had a good introduction to real estate through that. And of course, when 2008 rolled around, nobody really knew what to do. The big brokerages weren't doing transactions. A lot of the home builders were losing projects to lenders. And I felt that there was an opportunity to try to get involved with distressed real estate. So in 2008, I got together with a couple of buddies, and we started to pursue distressed opportunities from home builders that had partially built inventory and had a hard time really exiting. I think that there was, for a long period of time, these builders thought it's always going to come back. Real estate's always going to come back. Let's wait another month. And once we hit 2008, like late 2008, we started to recognize that the market wasn't coming back.
Yeah.
And so I was able to start transacting in distressed deals. I started basically buying deals in Homestead. Did a couple of deals with a couple of builders where we were basically buying homes at the time at $30 a square foot. I'm talking about brand new homes, granite tops, that was just excess inventory. And of course, we started to acquire these projects and repositioning them. And I would tell you from 2008 through 12, I really got a lot of experience really working these projects out. A lot of the deals we did were in receivership. They had defaulted CDD bonds. They had Chinese drywall. They had HOAs that were bankrupt. They had environmental issues. And so, going in and removing a receiver, carving out units with Chinese drywall and selling those off, stabilizing the building, bringing the HOA back to health, letting the CDD bonds go into default and buy them at a discount and really reposition the existing inventory, and later buying the lots. We were able to do a lot of deals where we were able to get partially built inventory, reposition the existing inventory into rental or for sale units, and later sold lots to D.R. Horton and Lennar, a lot of the national home builders. And so I dealt with so many things throughout that time that it really gave me a good view of what it took to get a really hairy deal and create value. A lot of people were running away from these deals at the time. There wasn't a lot of transaction volume. We were buying notes for 10 cents on the dollar. Obviously, I won't mention the lenders, but there's lenders in town that were selling us notes for 10% of 10% of their loan amount. And so we were able to create a lot of value. Of course, at the time, I was a lot younger and wasn't as well capitalized, and I had to bring in limited partners that had very expensive capital. So yes, I learned the business, and I was able to create some wealth for myself, but really couldn't extract all the value because I had really expensive capital that was backing us during the time. And in the process of doing this, I remember once in 2008, I was sitting back and everyone was pursuing what we used to call bulk deals. So everyone wanted to buy a bulk deal of fractured inventory. And so an example of a fractured deal was a 100-unit building where you can buy 70 units from the bank and 30 other units were sold to end buyers. And so as part of us acquiring these communities, I started a program with a couple partners called Valley Homes. And we started to acquire single-family homes one at a time because we found that the other 30 homes in this building were in some form of short sale or REO. We did it so that we can expand our portfolio, lower our basis, and control the HOA. And that's kind of where I stepped into the single-family space in a big way. From 2008 through 12, we acquired plus or minus 2,000 homes in South Florida, which we renovated, we stabilized, we put debt on it. And as you know, in 2012, Blackstone started Invitation Homes. And so for the first time, institutions viewed single-family rentals as a scalable business rather than a mom-and-pop trade. So a lot of these folks came to town, they wanted to get into the space. The opportunity for us to buy these homes as a principal really diminished because they were able to pay a lot more than we could. I think a lot of fix and flippers and wholesalers that are in your industry at the time hated institutions. We got heavily into the clerk of court auctions. We were buying on the MLS. And because we were buying based on a net yield and not based on a profit on a flip, it was very hard to compete with institutional buyers. And so I aligned myself with some of the biggest institutions in the world from 2008 till now, basically, and have built and aggregated portfolios. I've acquired plus or minus 40,000 homes in the last
It's incredible.
kind of 10 years. And our business started in South Florida. Today we're in 29 markets across the country. And so, we saw the SFR industry be born. I was one of the pioneers of the business. And, at the time it was the Wild West. There was no inventory, there was no process, there was no technology, there was no way to effectively manage. And I remember a lot of big institutions and multifamily guys were saying, how can you effectively buy single-family homes and manage them across so many markets? And it's something that we really had to prove out. And the industry has seen a lot of ups and downs over the years, but today SFR is a real industry. It's scalable. Most institutional investors play in the space. And we remain strong. And that's basically a very quick summary of my journey. on how I got to where I am today.
Very nice, very nice. Is there anything that you would have done different in the beginning of your career? Maybe before you got into real estate, do you wish you would have done something you would have done differently?
You know, as I think back, I try to think of what I would have done differently, and I can honestly tell you that I think I took the appropriate steps at the appropriate times. I think that the big downfall of people trying to get into business today is that they want to get to the top overnight. And I always knew my lane. I knew that when I wanted to get into bigger deals, I couldn't go buy a 300-unit building. I had to start by being a broker. And then little by little, I started to acquire some wealth, and I started to bring in limited partners, and I was overpaying for the cost of capital in some of these deals I did in my early years. And I could have bitched and moaned about it, but it wouldn't have gotten me the deals that I did and given me the experience that I got. So I think everyone's got to pay their dues. I certainly paid mine, and I can't really put my finger on anything that I would have done differently. I think that everything took its course, and I think that should be a big takeaway today from your audience is you got to pay your dues, and things have to run its course, and you have to give time for things to mature. And so I really can't think of anything I would have done differently.
Okay. To piggyback at what you just said right now, I think there's phases in life and there's phases in business. For example, I tell a lot of young investors that they get into the business and the first thing they do is want to buy rentals. I tell them, man, create a business that gives you active income before you start freezing capital. What do you think about that? Do you agree with that?
That has always been my view, and it was my strategy. I traded in and out of assets in my earlier years because if I wasn't going to get out of or exit properties and make returns, I was not going to have enough capital to buy enough of a portfolio where it was going to make any sense to me. To me, if you get a young investor that can buy a duplex or a quad and put 100% of their capital and not be able to do any other deals because they want to get the cash flow net of their debt service in a duplex or a quad, I think they're making a big mistake. I think when you're young, you have to compound.
Yep.
The compounding effect is important, and it's important to be well capitalized because as long as you're not well capitalized, investors will always take advantage of you because they have the upper hand because you can't write a check. So I think that your audience and young investors should compound, build their base first so that they can cut better deals with investors and start to pursue larger deals that they're going to hold long term. Today I don't sell anything, but I did for the first half of my career exit and trade out of everything, so I totally agree with your view.
And your mentality about not selling anything now, obviously you're doing it for cash flow, tax purposes, I would imagine. What is the biggest reason you're keeping properties now?
So I'm keeping properties today for cash flow, for the tax advantages of keeping properties long term.
Okay.
Obviously, building legacy for my kids, and all those things become very important. I remember in my earlier years when I used to walk up to a seller and say, "I got a buyer for your building at 20 million," and they said, "I'm not a seller," and I said, "Well, you paid 2 million. Why wouldn't you sell?" Or I'm giving an exaggerated difference. Yeah. They said, "What do I do with the money?" And when I had no money, that didn't make any sense to me. Today I realize that if your money is well invested in an asset and it's producing cash flow and you have the ability to refinance and roll your equity into another deal, it's a very tax efficient way to live life, and I think that that's the way to do it. But I think you got to build yourself up to get there. I don't think you become a landlord on day one.
How does a young investor that's getting into real estate, how do they know when is a good time to start buying rentals? Would you say they got to put away a couple years worth of their expenses in business and in personal? Is there a formula that you think is a correct way of doing it?
I think if you're doing deals in a programmatic way and you're buying and selling and you say to yourself, every 10th deal, I'm going to leave some capital tied up, and you build a plan, and that could mean something different for everyone, and everybody's personal situation, and depending what their capital needs are in their business to continue transacting, I think that it's really difficult to put a hard and fast rule. I think that one of the big mistakes of a lot of speakers and podcast people and gurus is they want to give hard and fast rules. And there's a lot of different variables in everybody's life and situation where it's really hard to give these specific rules. I think it's different for everyone. Okay.
Where do you see yourself in 5 years? Because I know you're not stopping. You're a guy that's always working, regardless. You've obviously built a lot of wealth and you've been very successful. What is your next game, or what's your next goal? Where do you see yourself in 5 years, let's say?
I have a personal goal of building my existing portfolio to 100,000 single-family rentals in America in 29 markets. Separately, I want to build a family office where I can now take advantage of deals that I can do with my own capital outside of any investors, where I can just be building really a legacy portfolio for my family. Invite a lot of friends and family that I've seen come up together, including you, like things that we could collaborate without limited partners, just with our own capital, where we could just have fun with it and we can play by our own rules and not really have a timeline or a deadline or any directive from any investor. That's what I think I like my next, I'm 45, in 5 years I'll be 50. I think that's what I want my 50s to look like.
Interesting, love it. What are your thoughts on the current state of the real estate market? I know a lot of people are talking about, they think there's a crash coming, but what are your thoughts on the market?
I think people paint the market with a broad brush, and it's just to say that the real estate market is going to crash is just too broad of a statement. I think if you look at it on asset class specifically, I think that you're going to be able to find opportunity. I think the office market right now is in terrible shape. I think there's a lot of opportunities coming. I think that...
Why do you think that is? Because they have, let's say, floating rates? Like they have...
I think the office... The pain across all of real estate is operators that got floating rates and the Fed widened rates too quickly and didn't really give the market a chance to react. And so I think that that's a good statement across all asset classes. If I had to pick on office, I'd say the dynamic of people working from home post-COVID, really people didn't come back to the office and there's just a lot of pain in that asset class. I think that there's a lot of good assets, good multifamily assets, even single-family assets that trade at a very tight yields based on cheap debt, for lack of a better word, and everyone continued to get floating rates. And so I think there's a lot of good deals out there that were not financed properly, and I think there's going to be some pain when a lot of these rates have already reset, right? And so as these rates were floating up, these deals are just not penciling anymore. And so I'm not calling that there's going to be another 2008, but there is already lenders that I'm talking to that have opportunities that they want to exit from their books, because they already have non-performing loans. Now, if you ask about the market, single family specifically, there is 2 million, there's basically a housing shortage of over 2 million units in America. I believe that was born from the last financial crisis from 2008 through 12, where home builders didn't build any new rooftops for 4 years. Population kept growing, and so today you have a very interesting dynamic. When rates go up, prices are supposed to get softer. But now when you have a housing shortage of 2 million units, and you have homeowners trapped in 2% and 3% mortgages, it's not very compelling to sell your home and go trade up and get a 7 or 8% mortgage. And so for that reason, I think people are holding out. Day one listings are down. And when there's no new inventory to what already was a housing shortage, you have a supply and demand imbalance, which are maintaining our prices strong. The beneficiary right now of this dynamic are the national home builders, because they have a lot of, I wouldn't say a lot, but they have margin in the homes they're building. They have the ability to buy down rates, and so they have available inventory. And if you follow the stocks, you'll see that D.R. Horton stock and others are thriving. So I don't see a collapse in the single-family environment, but I do see opportunities more on an enterprise level, more of loans that were given for development projects and more commercial-type assets.
More on the commercial side. Yeah, and I agree. There was a study done where 60% of mortgage holders have less than a 4% locked in their house.
Right.
Those people are not going anywhere.
Nope.
So I agree with you. I know that you're a machine, you're nonstop, and your mind never stops. I always see you, even on the way here today, you're on your phone for almost the entire ride here.
Right.
How do you unwind as a human being? What do you do to just, man, I gotta relax? Is there anything special you do?
I think that for me, I really enjoy what I do. And so some people like to play golf, some people like to fish. I like to do deals. I'm a deal junkie. And so a lot of times I'm on my phone, I'm doing deals, and I'm nonstop, and people think this guy's burning himself to death, but I really enjoy what I do. I do think, though, life has taught me over the years that you have to have an outlet. And so, I like to work out, I like to shoot, I'm a car collector, so I enjoy cars. I enjoy spending time with my wife and my children. And so I kind of devote my weekends to them. And it is important, because if not, you do get burnout. And so, I've dealt with things like anxiety and other things, and I think it's very common in entrepreneurs that manage a lot of people and things. And so you're right. I think learning at a young age that you have to give your mind a break, I think is important. But for me, it's just life. It's what it is, and I just move at that pace.
Yeah, I agree. As you scale your business, definitely that anxiety and the stress is gonna come, and you definitely have to find different ways to cope.
Right.
Like I said, working out, traveling. You gotta unwind. Do you like to travel?
I enjoy traveling for sure. I find that my time away with my kids and wife is, those moments that you're away, that you're not distracted, you're not getting phone calls, you're not answering emails. There's really a time that you get to connect with your kids kind of at a different level. So I do enjoy it, and I want to do a lot more of it. My daughter now is my first, my daughter's 16 and 12. I have two girls, and they're not going to be around forever. And so, we're really making a conscious effort, my wife and I, to take, 3 to 5 trips a year where we can really enjoy our time together. So I think travel is very important. I think downtime is good to charge your batteries, and it's also a good time to refresh your mind, because when you're going 1,000 miles an hour, it's hard to be creative and come up with new ideas. And sometimes you step away and you think, man, I'm wasting my time, I'm away from my business, but in fact, those might be the most creative hours where you get the best ideas.
If there's let's say you had to give advice to a new real estate investor out there, what would be one of the top 3 things you would tell them to do at the beginning of their career?
I kind of go back to the theme that I started with. I think you got to be real with yourself, and you got to know what your lane is. I don't think you could be Sell to Bobby overnight. I've seen Sell to Bobby's progression, and you are where you are today because you did a lot of the right things at the right times, and you paid your dues. Mm-hmm. And so I think that in a world where you want to get involved in real estate and you want to learn, I think and you have no capital, I think getting a real estate license is not a bad thing. Okay. I think that starting with leasing homes, which is something very simple, teaches you contracts, it teaches you the structure, dynamic, how do these deals transact. I think slowly you get into getting listings. What does that look like, right? Okay. And then over time, and you start understanding value, you start understanding the market a little bit better. Now you say, you know what, it's time for me to start to invest. I think that really taking your time and making sure you make the right deals, educate yourself. I think following guys like you, I think is important. I also think similarly, you should be very careful who you listen to. There's a lot of people that are out there giving misinformation because it's all about
clickbait.
Trying to take advantage of people, which is very frustrating. I like to give value and I like to help people and I like to give good advice. I would tell someone that if you're young and you're getting into the business and you admire someone, you should walk up to them and ask them to let you work for free, because the knowledge that you're going to get from someone from working for free is far greater than money. And so I think that you got to pay your dues. And I think that the generation after ours had a very different upbringing than we did. With social media, you have all the influencers that are in Lamborghinis and they're in yachts with girls in bathing suits. Like, you can build that life, but you're not going to do it overnight. And so I think that really being able, work hard, be able, put in the time that it takes, respect the people that have done it, get close to a good mentor that can teach you, and really stay in your lane and know that there's a progression. You can't get frustrated because you didn't go buy the 300-unit building on day one. I think that that's probably the best advice, and I think that a lot of times, even in my career when I was younger, I felt like, am I losing time? I'm not where I want to be. Like, those thoughts were very constant in my mind. And what you don't realize is that you're putting little building blocks every day, and you're not paying attention to those building blocks because you're just going and going, and one day you just take a pause and you look back and say, holy shit, look what I've built. And I think that doesn't happen overnight. And I think that people have to know that they're going to have to pay their dues, they're going to have to put in their time, and they're going to have to do the right thing.
I agree. I remember when I first started, even when we used to work together back in the days in 2012, I would work 7 days a week. I was a machine. I remember I found out my first kid was going to be born on Super Bowl Sunday. I was at work, underwriting and working. So I think a lot of the young generation, they got to learn how to put in the time, put in the work. You got to work hard at the beginning. They think that you just could, you're going to make $100 million overnight and you're going to do it by working 5 hours a week. That doesn't exist.
There's no free lunch, man. If you cut corners, it's going to be very short-lived. If you want the success overnight, it's going to lead you to do things that are not in your best interest long-term. And it's just important to do it the right way. And doing it the right way takes time.
And I agree. Find people that are maybe somewhere where you want to be and mentor them and go work, not mentor them, have them mentor you and go
Correct.
Work for free, put in that work. So I agree with that. And another thing that changed my course, for example, in the real estate world was joining a mastermind, a community of like-minded individuals. I also think that, finding mentors and masterminds are very important if you want to succeed in the investment side of real estate.
Right.
Jumping into something you mentioned briefly, that you're an avid car collector.
Yes.
What's your favorite car?
I like limited production Ferraris. I would tell you right now, if I had to pick my favorite car, it would be an A12 Competizione, which I do not own at the moment, but it's on the list.
Okay.
So
That's a Ferrari?
It is. It is
Okay.
very limited production Ferrari. They only made 500, and of course, in the world of Ferrari, it's very difficult to get allocation. So, just navigating that and building my collection, that's one that I want next on the list.
Nice. Is it already on the list, or you're?
It's on the list.
Okay, love it, love it. If you don't mind me asking, what's the most expensive car you own of these special limited cars you have?
The most expensive car in my garage is a 2020 Ford GT Heritage. It's one of 50 in the world, and it's worth about 1.5 million. There's only 50 in the world. I think it's going to 2x that over time. But yeah, that's the most expensive car in my collection at the moment.
Awesome. So aside from collecting them, are you seeing this as like an investment vehicle where you're able to park money also?
One of the reasons why I love the car game is because if you learn the car game, you can actually make money investing in the right cars. And so I've done really well with my car collection. And so to really get into a hobby where you get to enjoy a toy that's actually appreciating, I think is very interesting to me, because it also helps push a lot of my deal junkie ways of regular life. It pushes it into my hobbies, which some people would argue is not good, but for me, it's, I think when you have the mindset of an entrepreneur, you want to keep compounding your wealth. I think you find hobbies and activities that continue pushing you in that direction. And I think that cars, when done properly, can be viewed as an asset class, yes.
Nice. Do you see them as like trophies? Like, man, I bought this crazy Ferrari that they only made 1 out of 500. Or you don't really see it that way? I mean,
when I was younger, I used to have a thing where I used to buy a watch for every deal that I closed.
Okay.
And so I used to collect watches that represented deals as the trophies for that deal.
Got it.
I don't necessarily look at the world that way anymore. I don't tie success in deals and in transactions to something material.
Okay.
To me, success is me being able to compound my wealth and rolling it into a bigger portfolio that I can enjoy and my kids can enjoy long term.
Okay.
And really using the cash flows from those assets to spend money on toys. I don't view them as trophies anymore. I view them as toys that I'm fortunate to have because I put in the work.
Okay. Love that. Love that. Marcos, you being now an institutional player and an institutional guy, how can regular real estate investors or wholesalers work or interact with guys like you in the institutional world?
I think there's been a misconception in the investor community, and I think wholesalers and fix and flippers view institutional buyers as competition. They shouldn't view us as competition. They should view us as an outlet for their inventory.
Okay.
A lot of, not a lot, all institutions are well capitalized and buy homes cash. All institutions have the ability to renovate their own homes. And so if I was a wholesaler, as opposed to me trying to build a business where I can wholesale homes to fix and flippers in one market, I would try to figure out how could I get a lot of product in multiple markets in front of institutional buyers. An institutional buyer doesn't have any emotions. It's not about what's the color of the wall or the tile. It's just more about returns, right? And so I think that I think there's been a huge disconnect between wholesalers in the market and institution, and nobody has really cracked the code. Institutions have largely bought their homes on the MLS and have not really tapped into the wholesale market. And I don't think nobody in the wholesale market is doing it correctly, where nobody's really tried to tap into the institutional world. Has a lot to do with logistics. Like, we need a 10-day inspection period, for example. So if you tied up a property for 10 days and you bring it to me on the 5th day, you don't give me enough time when I'm reviewing homes in masses. But what I would say, if I was a wholesaler today, I'd scrape a lot of data in submarkets in the Sun Belt. I'd see what institutions are buying where. I'd see the price points that they're paying. And I try to market in those specific areas to attract product that I can exit to an institutional buyer, which is a forever buyer that has unlimited resources. So I think there's a huge opportunity for wholesalers to tap into the institutional world.
Okay, love that. Now moving forward, where do you see opportunity? I know that a lot of people are talking about that there's going to be a big transfer of wealth. There's going to be a lot of money changing hands. Where do you see an opportunity now over the next, let's say, couple of years?
I think right now a lot of deals were acquired at tighter interest rates, and the Fed resetting interest rates and widening it to the tune of like 500 basis points really is repricing the market at a very rapid rate. And so right now, I think that it's important to be very deal disciplined and to not try to get in too early. I think if I can look back and say what were the mistakes that were made in the last financial crisis, that people started to see some distressed opportunities and tried to compare them to market peak prices. And what that created was a situation where investors came in too soon and arguably overpaid because the market continued to deteriorate over time. So I would tell you, do your research, spend your time, become the expert in the asset class that you want to be in, understand rents, understand renovation costs, understand the cost of capital, understand the cost of debt, and really be very strategic. I would try to make relationships with lenders, with developers, and I think that for the right people that take the right steps, I think there's an opportunity, like you said, there's going to be a big transfer of wealth, and I think that, I was the beneficiary of the 2008 through 12 financial crisis. I think maybe I'll see 3 in my career, so we're going into my second one. And so I personally, I'm staying very liquid, and I'm looking for opportunities, and I think there's a huge opportunity right now to get in, so long as you're very disciplined and you don't jump in too early.
Actually, that's some good advice you could give a lot of real estate investors or anybody right now transacting in real estate is stay liquid. Stay prepared.
Right.
Try not to freeze any of your capital, especially in this atmosphere of that the market is going through.
I hear a lot of gurus saying that cash is junk and cash is trash, and
they've been quiet lately.
Yeah, all that cash is trash is all bullshit.
Yeah.
If you don't have capital, you can't do deals.
Yeah.
And so staying liquid is very important. And because when the opportunities arise, if you can write that check, not only are you going to get the right deal, but you're going to cut the right deal with a capital partner because now they know you can write a check alongside them. So cash is not trash. Build up your equity and your capital, and I think the opportunities are going to be out there to be had.
Love it. Well, Marcos, thank you for giving me your time and coming over here and filming our podcast.
Appreciate the time.
How could people follow you if they they want to reach out to you or potentially do deals with you in the future? What's the best way for them to reach out?
Man, I'm not a big social media guy. I'm an under the radar guy, so maybe Google.
All right, Google, or if not, reach out to me and I'll get in contact with Marcos.
Yeah.
And we could potentially do something together. If you guys got good information from this podcast today and you want to see more podcasts just like this, make sure you click on that subscribe button, turn on your notifications so you don't miss the next podcast. And I'll see you guys on the next episode. Take care.